Hi, I'm Lena Brooks, and today I want to show you something strange about how money moves around the world. There's a company in the Cayman Islands that owns absolutely nothing. No employees, no office, no products. It just exists on paper. But that company, it's worth billions of dollars. And here's what struck me. It's completely legal. What I want to show you today is how the world's wealthiest people, largest corporations, and yes, sometimes criminals, move money in ways that are almost impossible to trace. Not because it's secret, but because the system was literally designed this way. Let me ask you something. Why would anyone want to hide money offshore? The answer isn't always they're doing something illegal. Sometimes it's tax optimization. Sometimes it's asset protection. Sometimes it's just moving money between countries for business reasons. But here's where it gets interesting. The system that allows legitimate wealth management also allows illegitimate wealth concealment to happen in the exact same way, using the exact same tools with almost no way to tell them apart until something goes very, very wrong. Between 2010 and 2015, investigators found that a single money laundering network moved over $2 trillion. Not million, billion, trillion. Nobody stopped it while it was happening, because the system was working exactly as designed. So how does it actually work? Let me walk you through this. Let's say you're a real person, you own a company, you make money, you pay taxes in your country. Simple. But what if that company was technically owned by another company, and that company was owned by another company, and that final company exists in a place that doesn't ask questions about who actually owns it? That's when you've created what's called a shell company. It's legal, it's boring, it's also the foundation of how trillions move without anyone really knowing where they're going. Here's a real example that happened. A man in London wanted to buy real estate in New York. Instead of buying it under his own name, he created a company. That company was registered in Delaware, a state that, at the time, didn't require you to prove who owned it. It's called a bearer share structure. You just had to have the paperwork. Then that Delaware company created another company registered in Nevada. Different rules, different requirements. Then that Nevada company registered a shell entity in the British Virgin Islands. The actual man in London, his name appears nowhere on any document. But the real estate gets bought, the paperwork clears, the money moves, and if anyone asks who owns this building, the legal answer is a company in the BVI, which is owned by a company in Nevada, which is owned by a company in Delaware, which is theoretically owned by nobody you can identify. This is called layering, and it's the central mechanism of the entire system. Now, you might be thinking, this sounds insane. Why would countries allow this? They allow it because there are legitimate reasons it exists. A multinational corporation with operations in 47 countries needs to move money between subsidiaries. Tax treaties between nations create situations where routing money through specific jurisdictions legally reduces what they owe. A business owner in an unstable country might legitimately need to protect assets from political seizure or corruption. The system wasn't built to hide crime, it was built for efficiency and risk management. But here's the problem, and this is where it gets strange. The tools for legitimate wealth management and illegitimate wealth concealment are identical. A shell company in the Cayman Islands can legally exist for a Swiss bank account that legally moves money to a trust in Singapore that legally invests in real estate in London. That's fine. But that exact same structure can also be used to move money from a trafficking network to corrupt government officials to shell accounts in places where the money just vanishes. The system doesn't know the difference. It just processes the movement. But the strangest part of this system, it's actually designed for legitimate business, and that's what makes it so difficult to stop. Let me walk you through the actual mechanics of how money moves through this system, because this is where it gets interesting. When you have layers of companies, each one creates legal separation. Company A isn't responsible for what Company B does. Company B isn't responsible for Company C. This is called the corporate veil. It's supposed to protect legitimate business. You shouldn't lose your personal savings if your corporation gets sued. That's fair. But when you intentionally create layers specifically to hide ownership, something changes. You've moved from legal separation to plausible deniability. Here's how the money actually moves. Step 1. The original source. Let's say it's a real estate developer in Russia who just made $500 million selling a building. He doesn't want it in his personal bank account because that creates a record. Russia tracks that. Step 2. He creates a company, Company A, in his home country. He sells the building to Company A for $500 million. It looks like a legitimate business transaction. Company A now owns the asset. Step 3. Company A sells the building to Company B, which is registered in the British Virgin Islands. The sale price? Still $500 million. It looks normal. It's just a company-to-company transfer. Step 4. Company B then sells to Company C in the Cayman Islands. Then Company C sells to Company D in Panama. Each transaction looks legitimate. Each one has paperwork. Each one moves through the banking system like a normal business deal. But here's what's actually happening. The money is bouncing through jurisdictions specifically because each jurisdiction has different rules about ownership disclosure, beneficial ownership requirements, and record keeping. By the time the money reaches its final destination, maybe a real estate purchase in Miami, maybe a bank account in London, the connection between the original source and the final destination has been broken into so many pieces that reconstructing it requires investigators with access to documents across multiple countries, documents that some countries simply won't share. This is called fragmentation. The money's path becomes impossible to follow because you'd need to solve a puzzle with pieces held in different countries under different laws, with some pieces deliberately destroyed. So here's where it gets absurd. Regulators and law enforcement know this system exists. They know how it works. They've caught people using it. There are laws against it. But catching someone requires proving the intent to conceal, and the system is designed so that at every single step, everything looks legal. The Russian developer didn't break a law by selling his building to Company A. Company A didn't break a law by selling to Company B. Company B didn't break a law by selling to Company C. Every transaction is documented. Every transaction has invoices. But together they form a deliberate chain of concealment. Proving that requires subpoena power across multiple countries, access to private banking records, cooperation from governments that sometimes benefit from the secrecy themselves, years of investigation, willing witnesses, or leaked documents. Most people and organizations using these structures never get caught because they never break a law that's easy to prove. The ones who do get caught are usually caught because something goes wrong. A disgruntled employee leaks documents. A partner turns informant. A transaction triggers an automated flag because the amounts were too large or the pattern too obvious. The Panama Papers, the leaked documents that exposed billions in hidden wealth, only happened because a law firm got hacked, not because authorities were investigating, not because the system failed, but because criminals got sloppy in a different way. Let me put this in perspective. The International Consortium of Investigative Journalists estimates that between $21 and $32 trillion is held in offshore financial centers. Think about that for a moment. That's larger than the GDP of every country on Earth combined. Not all of it is hidden illegally. A lot of it is legitimate wealth management. But the same infrastructure holds both. Here's what made me pause. The system is so normalized that major banks openly advertise offshore wealth management services. They have entire departments dedicated to helping wealthy clients use these structures. It's called international tax planning. Is it legal? Usually, yes. Is it the same infrastructure criminals use? Absolutely, yes. The difference between a wealthy person legally minimizing their tax burden and a criminal hiding stolen money is often just a matter of intent, and intent is nearly impossible to prove when the actual transactions look identical. This system exists because governments allow it. Some countries, Cayman Islands, Panama, Delaware, the British Virgin Islands, have built entire economies around being the place where nobody asks questions. They don't ask questions because asking questions would tank their business model. These are tiny island nations. Offshore banking might be 50% of their entire economy. Meanwhile, larger nations benefit too. They prosecute the obvious criminals to look tough on crime, while the system itself keeps running. And for the people using it legitimately, the system provides real protection, real tax efficiency, real asset security. But here's the fundamental problem. You can't have a system that works for the legitimate uses without it also working for the illegitimate ones. You can't build a tool that hides money for good reasons without it also hiding money for bad reasons. So the real question isn't how do criminals hide money, it's why did we build a global financial system that makes it almost impossible to tell the difference between legitimate wealth protection and criminal concealment. And that's the strange part about global finance. The system works, but sometimes it works a little too well. I'm Lena Brooks, and this is Her Money Files, because every fortune hides a cost.